Hello, traders. It's 8:05 a.m. Chicago time on Tuesday, the 23rd of April, 2019. Sorry about the late start. Um, Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're looking at a little pop up in the indices. Crude oil's higher again. It's leading the pack up 0.41%, 26 cents, trading at 65.81 in a June contract. The dollar's up as well. It's the second strongest futures product that I'm looking at this morning, up 36 cents or 0.37%. The Dow's up 31. Interestingly, the 10-year note is up 3 ticks, and the bonds are up 4 ticks. The Nasdaq up 4, and the S&P is up 50 cents, trading at 29.13. The S&P had pushed about 3.5 points higher than where the high of yesterday. So that's where we are this morning. The laggards gold. Gold has fallen through the 1280 and is trading at 1268.80, down $8.50, $8.7 or so. So that's where we are. Overall, what's pushing us around? There's a fair amount out there. You know, a lot of this is earnings season, but generally, well, we never know the why, really. We sometimes find out later, so it's hard to speculate, and frankly, it doesn't make a difference to our day-to-day what the why is. But in general, the U.S. stock index futures were slightly lower as investors await a barrage of major earnings this week. Oil prices hit a 6-month high as U.S. tightened sanctions on Iran. A jump in energy shares failed to overcome not-so-positive starts to the earnings season in Europe, where major indices fell. Earlier, Japan's Nikkei closed higher. The dollar index held near 3-week highs, while gold prices fell. New home sales figures are scheduled to be released, and yada, yada, yada. We have Verizon, Lockheed Martin, eBay to come out later today. So that's where we stand. Let's take a look. So it's slightly risk on, really almost a neutral stance, mixed stance this morning in terms of sentiment. Let's take a look at what we expected yesterday. Yesterday, the primary scenario, given the way that Wednesday, Thursday, and by the way, if I confused you yesterday by repeatedly saying Friday, it's because I'm programmed that on Monday, the last trading day, is Friday, and I kept saying Friday. It is actually has become rare for the CME or the U.S. exchanges to close on holidays, but they did on this Good Friday. So I really meant Thursday when I said Friday in yesterday's video, but Wednesday, Thursday put in lower highs, lower lows. They look to be establishing one-time framing down. So that is the day-to-day trend, and if that's the day-to-day trend, then I'm going to be looking at the higher probability of a continuation of that trend unless it's interrupted, news or otherwise. So the primary scenario is to push back towards 2907. If you recall, 2907 was a significant low volume node in the Globex session yesterday, and then I was looking for an impulse down to take out the low and then continue lower towards 2895 and then 2890 and then ultimately 2885 before the bounce into the close. The secondary scenario is a push down towards the 2897, 2899, the century figure area. We were opening right on top of the century figure. So expected some chop there. That's what I drew in on that pink line there. And then I was looking for an impulse higher and a push into the point of control and into 2910 and a half for a continuation to 2915. And so And so that's what was expected. That's basically what happened, but the market did not give us a push down. So look at this. Ooh, what's going on with my, looks like my charts reverted back. Boom, boom. So we had an open auction right on top of the 2900. We opened at 2900 yesterday, the century figure, and we had an open auction in range um, right on top of the 2900 figure. So there was nothing to do until it broke one way or the other. So the opening swing yesterday was 2901 to 28.99, and the idea was to find it breaking one way or another, and it did. It pushed to 2901.50, pulled back to the open, and then off to the races we go. I did not catch that push up, unfortunately. That's the impulse that I was showing here. That's this impulse right here. So I expected it to be choppy, but with a downward skew into 28.97, and then to impulse up. That's this spot to impulse up, and I'm looking for to trade the pullback of the impulse for a continuation to the point of control to 29.10.50, and then ultimately to 29.15. That is the key trade on scenario 2, and you can see here it pushed right into the point of control. This is the point of control of the prior day, 29.08.50, pushed up and then pulled back, and there's the setup. That's the setup right there. The setup is the pullback after the impulse into the mid and sit tight as long as it does not breach this mid, especially if the mid continues to migrate higher. Then we hold on for 29.15. Could not get there. It ended up pushing into 29.13 and a quarter. Currently trading 29.14. So yesterday, look at this volume. 559,000 in the pit session. What is the expected or the most common or the mode of volume? I can't wait for your answer. Unfortunately, I'd have to sit here for 15 seconds silent. So I'll tell you what it is. It's 1.1 million. So we're almost 50% of the RTH volume yesterday at 559. 50% would be 550,000. So we are almost exactly 50% of the quote-unquote common volume for this product, and that's probably attributable to the fact that the rest of the world markets were closed, and so so understand that this action here yesterday was happening on really pretty thin air. The delta, if you look at what's happened here, we had an impulse up, but the delta didn't quite impulse at all. There was no follow through. This was more the offers pulling and the bids lifting small lots or small-ish lots than it is anything else. There was a bit of delta on the very large lots early in the day, but overall it stayed quiet until later in the session. And I know this because I'm splitting the lot sizes on the delta. But if you look at the overall delta, just dead silent throughout the session, even though the corresponding price would be the opening price. That's the zero price for delta for the session. The corresponding price was much lower. You would expect delta to be higher to move with price, and then it finally caught up. Here's what the delta looked like split into its three key components: small lots, which are 9 lots or less, large lots, the white line, is 10 lots to 99 lots, and then the yellow is everything that is greater than or equal to 100 lots. And you can see there's a little bit of participation by the large lots early on, but overall it's pretty sideways. Small lots pretty sideways, large lots pretty sideways, until later in the session where we see the delta finally take off Small lots not participating at all, with large lots participating some, but mainly driven by very large lots. Why do we care? Why so much information? Uh, it's simply providing a little bit more context. It's not a trigger for a trade to look at the delta. It is sometimes, but overall, it tells us volume. Remember, volume is the energy behind price. Price is price. It's the direction. It's the indication. It's a dot. Volume is the energy into that price. And this is why volume profiling is really, really important. It's something that I've been looking at for the last almost 15 years. I'm looking at volume as an indication of how much interest versus price alone, which is what a lot of traders focus on. Nothing wrong with that as long as that works for you, but I like to see how much went into a certain price or price range to understand how the auction operated and how accepted that price was. So we finished near highs. We have a normal variation day, and a day type. It's a pretty common day type. We did take out the prior day's high, so we've pretty much we ended the one-time framing down that occurred over one day, and we are basically in balance in this large area that we've been trading in for some time, since the 12th of April. So if we look back here, we could see that these 3 days overlap each other. Then we had a break higher last Wednesday, which sold off pretty good. We had a normal variation day there as well, and we ended up pushing the IB down. Then the next day we put in a lower low, but we also had a neutral day up. And then yesterday we opened at the lower end on news, and then we pushed higher, and it looks like we keep trying. You can see these 2 days here keep trying higher into the close, and all of this now becomes part of this composite zone. And you can see on the left as I'm shifting, watch this profile here, as I'm shifting and including these 15-minute bars, you can see how the profile is building and where the volume is going. It's going above the point of control. It keeps getting added above the point of control for almost the entire session yesterday, and it appears to be pretty sharp, right? This profile is getting pretty sharp here. Let me change the color of it because yellow is what I'm drawing with. Make it stand out there. You can see that it's getting pretty sharp. So what does that mean if it's getting pretty sharp? It means there's quite a bit invested in this zone. So from 29.15 down to about 2900, quite a bit of energy stored in there. We expect that energy to pop and for it to move away from this area. It looks to be pulling back and taking out some of this stem, this thin area that we left behind from last Wednesday, and if it starts to move into that area, it's likely to move into the next high volume node right up here in the 29-21 area. That's what I'm expecting. So that's where we are. Gosh, I'm really going into too much depth here probably, but it's really important for you. The goal for you is to understand the story so you can make your own decisions and hold on to your trades when you do take them. Look at the overnight session. We open, test up. Clearly, we would expect a test up given that the auction was interrupted to the buy side. We pull back to the point of control right in here, and then we bounce back up to the prior day's high. Again, we pull back to the point of control, and we are just chopping until just recently, and then we push the high. We're holding near highs. The overnight session had pretty decent volume and has a really poor high. We don't have a taper on either end. It looks to be a pretty choppy. You could see that the shape of the profile and the amount of volume that went into each price is quite erratically distributed. It looks like it was exploring prices throughout the range. and there appears to be no consensus, no taper. So that's where we stand. So let's take a look at what we are expecting for today. Before I do that, actually, I want to take a moment to let you know that if you're looking at this on the convergenttrading.com site, if you refresh the page at the top of the page, it'll give you a link. It'll give you a link to a webinar that I'm doing this Thursday about the micros. If you recall, I've been pushing for these micros since about 2012, pushing the CME for it, and it's finally being released. The expected trading date will be May 6th session, which starts at 5 p.m. Central, 6 p.m. Eastern on Sunday, May 5th. And it's a really important product for everybody to know about and be prepared for, because it gives all of us some control over leverage, since the minis are really over leveraged for anybody who's looking to learn. Anybody who's consistent already should probably stick with the minis. But if you're learning, you need to get off sim. You need to do it at a lower cost. This is a product. I'll share a template for a trading plan. If you want to sign up, the link is right there. It's also on the TraderBite page at the top. Please register for this. You will not be spammed, hopefully. I don't control that list, but Futures IO is pretty good about that. So please register for this, and I hope you'll attend. The recording, it'll be recorded and distributed if you cannot attend live. Okay, so what are we expecting for today? I know that this chart looks really noisy to you. I've heard that several times, but the goal for me is to create somewhat of a heads-up display where I'm looking at different time frames, and also I'm including my homework in the form of these bands. These bands are called stock zones. It's a stock zone is an area that I intend to interact with the market. It is an area that I intend to engage, and these are key areas that where I'm expecting a reaction given the presence of the proper order flow dynamic in order to engage with it. So looking at, so try not to get too distracted by all the lines and everything else. Everything on here is important to the way I execute. We're opening in a gap up, very close to the prior range. I'm expecting an open auction that reverts back. I'm expecting it back into 29.10.50. I'm expecting it to push into the MC point of control at 29.08, and then I'm looking for it to push out and then start to squeeze higher into 29.21 for today. That's the key target, key trade target for today is 21 even. Okay, that's where I'm expecting it to go on the primary scenario. Secondary scenario, no, the sign up for that webinar is free. You don't have to be an elite member. If you do get something that says you have to be an elite member, please contact me on Twitter or at convergenttrading.com/contact, and I'll make sure you get in for free. You shouldn't need to be a member. The secondary scenario is an open auction that actually squeezes early into the into the Wednesday stem, leaving us with a small gap and then pushing into this 29.27 area, basically climbing higher. More of a trend type day, potentially with a lower volume, but I expect everybody back today. I expect it is Tuesday, one of the most volatile days of the week, and I'm expecting it to do some real business today. Those are the two key scenarios for today. We're likely to push into 29.10.50 and maybe turn in that area, or down into 29.08 and a quarter before the turn. I expect it to turn up. The third scenario is that it doesn't turn up, and now we have a much more interesting play in that we squeeze that overnight high, we consolidate, we fall back towards 10.50.08, and then attempt to come back up and then start to push the lows. And in that case, I would be looking for 2,900 as the target to the downside. I know it sounds like I'm speaking from both sides of my mouth, but my goal here is not to is not to predict what the market does. My goal here is to have some sort of a plan and intention for each scenario that the market might present. Okay? Good luck, and I'll catch you tomorrow. Again, don't forget to sign up for the Futures IO webinar for this Thursday. I think you'll find it very useful. I'll answer all questions about margins and costs and all that stuff. Take care.